Hi, I'm Glenn Sharp.
And I'm Ewan Fletcher, and welcome to the Sharp Accounting News.
The recent federal budget was announced and has very little in it, unfortunately, for small business. The government's focus seemed to be on reducing cost of living pressures. Income support payments like Centrelink payments were increased by $40 a week. Eligibility for parenting payment was extended from 8 years out to 14 years. So a lot of these measures are aimed at reducing the cost of living pressures on low income earners. On the plus side, there were some measures introduced to target multinational companies to get them to pay a higher share of tax in Australia on their earnings in Australia. We're still waiting to see the details on this and whether that's going to have any major impacts. But it is a target of the ATO at the minute.
As part of the federal budget, the instant asset write-off has ended, and the next stage of this for the 12 months ended 30th of June 2024 is that there will be a $20,000 limit on instant deductions for plant and equipment purchases.
Another measure that unfortunately has been scrapped in the budget was the patent box regime, which would have given tax breaks to those who hold patents and have spent a lot of time and money in developing patents, but unfortunately the federal government has now scrapped that and it won't be introduced.
There's some changes coming in regards to paying your employees superannuation. At the moment, you can pay superannuation anywhere as long as up to each quarter. What's proposed from 2026 is every time the wage of the employee is paid, the superannuation will need to be paid.
In regards to superannuation, there was a fairly significant change for those with a superannuation balance of more than $3 million. For people who have a balance above $3 million, basically there's going to be an additional 15% tax. Now the real sting in the tail on this one is that it's going to be on unrealised gains. So if you have a property that appreciates significantly in value and tips you over the $3 million, you're going to pay income tax on that gain, even though you haven't sold the property. Whether this makes its way through to full legislation, we're yet to see.
With the end of the financial year fast approaching, it's really important that you undertake tax planning for your business to minimise any tax payable and to put yourself in the best position going forward.